This is Uranium Spotlight on Tuesday, September 24th, 2024. Brought to you by Pure Point Uranium Group, your exploration partner in Canada's Athabasca Basin. Amidst surging uranium demand, Pure Point's continuous 2024 exploration across their vast portfolio, backed by industry giants, underscores their focus on the next major discovery. And now your host, Chris Frostad.
This week on Uranium Spotlight, the world's biggest banks step up for nuclear. The U.S. Energy Information Agency releases its second quarter uranium production report. 3 Mile Island opens its doors to Microsoft, and UEC expands its U.S. footprint. Last week, uranium spot trading was volatile, shaped by contrasting narratives. Concerns over possible Russian export bans to the U.S. and Europe, and a U.S. Federal Reserve rate cut sparked carry trade interest, which typically boosts spot demand. On Friday, news of Constellation Energy's plan to restart the TMI-1 plant in Pennsylvania led to a surge in uranium equities and off-market buying. Despite this positive momentum, spot sellers still face limited demand for immediate delivery, resulting in price reductions to attract buyers. The spot price saw multiple transactions, including deals at $79.50 on Monday and Wednesday. A larger deal on Friday lifted the price to close the week at $79.75. 7 spot transactions totaling 650,000 pounds of U3O8 for prompt delivery were recorded last week. The term market was quieter, with 2 new midterm carry trades, but no fresh formal demand from utilities. Some non-U.S. utilities are reviewing offers for uranium with delivery dates stretching into 2030s, while a U.S. utility is nearing a decision for delivery starting in 2029. Although activity remains moderate, several utilities are quietly engaged in direct discussions with suppliers. Big banks are stepping up to support nuclear power, which is increasingly viewed as essential to the global energy transition. Historically, building nuclear reactors has relied heavily on public funding, large subsidies and government loans covering most of the cost. But now the financing landscape is changing. 14 of the world's biggest banks, including Goldman Sachs, Bank of America, Morgan Stanley, Citi, BNP Paribas, and Barclays, have pledged to help triple nuclear power capacity by 2050. With their backing, nuclear reactor builders could soon have access to loans and financial resources to push these projects forward. While specific plans haven't been laid out yet, it's likely that these banks will support not only reactor construction, but also the broader nuclear fuel cycle. There's also potential for the World Bank to play a role. This week, industry leaders urged the institution to start financing nuclear projects. Tom Greatrex, CEO of the Nuclear Industry Association, noted that over 20 countries have signed a declaration at COP28 to triple nuclear capacity, a goal that will require both private and development bank support. Although there's plenty of uranium in the ground, there's concern that without enough investment in mines, conversion, and enrichment, utilities could face supply shortages as new reactors come online. If banks can speed up mine development, it would help address the current uranium supply crunch while increasing private sector financing for reactor construction and will likely boost uranium demand even further. Right now, utilities are willing to pay almost any price for uranium since building a reactor is far more expensive than fueling it. However, if uranium prices rise above $100 a pound and stay there for an extended period, we could eventually see electricity prices starting to reflect those higher costs. The U.S. Energy Information Agency has just released its second quarter uranium production report. According to the report, uranium production increased from about 82,000 pounds in the first quarter to 97,000 pounds in June. While this reflects an 18% increase in production, it's still a tiny fraction compared to the uranium needed to power the U.S. nuclear sector. To put it in perspective, the U.S. used 51.6 million pounds of uranium in 2023, roughly 13 million pounds per quarter. This means the U.S. is consuming 133 times more uranium than it's producing. So where's all this uranium coming from? The largest supplier to the U.S. last year was Canada, followed by Kazakhstan and Australia, which were tied for second. Russia and Uzbekistan took 4th and 5th spots, respectively. However, with the U.S. banning Russian uranium this year, which accounted for 12% of supply, there's growing pressure on alternative sources. While waivers allow Russian uranium imports until 2028 if no other supply is available, the U.S. will increasingly rely on Canada and Australia. Kazakhstan, another major producer, has much of its uranium tied up in long-term deals with China and Russia. For investors, these supply constraints could have significant implications on uranium markets moving forward, particularly in North America. The U.S. is making steady progress in restarting some of its older nuclear reactors. These reactors were originally shut down in the 2010s when low natural gas prices made nuclear power less financially appealing. However, with rising gas prices and electricity demand exceeding predictions, reactors that are being decommissioned are now being brought back online. Two reactors at the forefront of this effort are Holtec Palisades plant in Michigan and Constellation's 3 Mile Island Unit 1 in Pennsylvania. The Palisades plant has received a multi-billion-dollar federal loan to support its restart, while Constellation is investing $1.6 billion of its own funds into 3 Mile Island. 3 Mile Island holds particular historical significance. In 1979, it was the site of a nuclear accident that, while causing no fatalities, sparked widespread anti-nuclear sentiment that persists to this day. Notably, Unit 1 of the 3 Mile Island wasn't affected by the accident and remained operational until 2019, unlike Unit 2, which was never reopened. Now Microsoft has signed a power purchase agreement with Constellation to buy energy from Unit 1 to power a new AI data center. This deal not only helps finance the reactor's restart, but also highlights a trend of tech companies choosing nuclear power, especially for AI data centers, over wind and solar, due to nuclear's reliable baseload energy. While AI data centers are increasing demand for energy, particularly nuclear, they might not be a major driver of new uranium demand. Many of these centers may use advanced reactors, which require less fuel than conventional ones. Additionally, beyond Palisades and 3 Mile Island, there aren't many reactors left that can be brought back online. That said, these advanced reactors, AI data centers, and reactor restarts are just part of the broader picture affecting uranium prices. The key drivers include the large-scale reactor build-out in countries like China, the growing division between Eastern and Western uranium markets as China and Russia secure more of Kazakhstan's uranium, and Western nations seeking to move away from Russian-supplied fuel. Lastly, uranium production has lagged behind demand for several years, and new mines are not coming online quickly enough to bridge the gap. Uranium Energy Corp, or UEC, has announced a significant acquisition of Rio Tinto's Sweetwater plant and uranium assets in Wyoming, adding 175 million pounds of historic resources. The $175 million deal establishes UEC's third U.S. production platform, complementing its existing operations in the Great Divide Basin. The Sweetwater plant, a licensed 3,000-ton-a-day mill with a 4.1 million pound per year capacity, will play a crucial role in enhancing UEC's in-situ recovery capabilities. This acquisition bolsters UEC's resource base, providing a unique opportunity to capitalize on both ISR and conventional mining techniques. Around half of the acquired resources are ISR amenable, while the rest offer long-term growth potential through conventional mining. The addition of 53,000 acres of land and an extensive geological database also enhances UEC's exploration prospects, making it a dominant player in the region. With favorable market conditions, including geopolitical catalysts like the U.S. ban on Russian uranium, UEC is poised to meet growing domestic demand. This move solidifies UEC's position as a key North American uranium supplier, driving production growth and positioning it for long-term success in the clean energy sector. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by PurePoint Uranium Group. PurePoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with some of the largest uranium suppliers worldwide. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.